Africa, we just want to say we love and we appreciate you for continuously supporting us here at the Money Revolution. We encourage you to like, to share, and to also subscribe to our content, as we have been bringing you money information for the past 20 odd weeks or so. Now, today we continue with our new segment of dissection of news and topics that are making financial headlines. And today I have once again my co-host, Ghost Money.
Greetings to you, my friend, and to all the podcast viewers.
All right. Glad to have you back here again, Ghost Money. I can tell you that the feedback was very, very exciting. People loved you here in our previous episode, and I want us to continue with the sort of like the same theme and just educate our people and show them how money really works. Fantastic. So today we have Wednesday, the 3rd of December's edition of the Business Day, and we're just going to dissect a few headlines. I hope you're ready, Ghost Money.
Always ready, my friend.
All right. Okay. I think there's a headline that I saw here that was very exciting. Mm-hmm. It speaks, as it says, why the dollar is surging, Bitcoin is sliding, and gold is winning. So the author was Health Muchena. I hope I'm pronouncing your name correctly, my good sir. So it opens up by saying, for more than a decade, investors operated in a world of abundant liquidity. Now that era is fading. He's saying that the US is rolling over enormous amounts of short-term debt weekly because the demand for long-term bonds has weakened.
Well, there's a lot in that statement.
Yeah.
I mean, just the opening line to say liquidity. The days of excess liquidity,
of abundant liquidity,
are over.
Yeah,
I think it's worthwhile just unpacking what does that mean for our audience,
for our viewers. Yeah,
we always talk about money printing. We talk about money supply. In previous episodes, we talked about how paper money replaced gold and silver, and how the central bank is able to increase the money supply by simply hitting enter,
a click of a button
on a computer.
Yeah.
So this liquidity that he's talking about is essentially excess money supply, money that's in the system, awash. And it's mostly the dollar, as opposed to other currencies, because if the South African rand becomes overly supplied, then the inflation effect is going to be felt almost immediately.
Yeah.
But because the dollar is a reserve currency, the Americans have the advantage of printing dollars without causing inflation. Because those dollars leave America
and they go to other countries. Yeah. I think we need to unpack for our viewers what we mean when we say the US dollar is the world's reserve currency. Yeah, because I think that's very important. And I think it also speaks to the idea of centralization of money, and also some of what we've seen in Ukraine and Russia, with Russia's reserve assets being frozen by the US as a result of the war between them and Ukraine, which eventually led to their own money being used to fund a war against them. Yeah.
So, I mean, when we talk about reserves, I think the easiest way for our viewers to understand concepts which are presented as complicated, but they're actually very simple.
Very simple.
They're very simple concepts.
Yeah.
A country is like a household.
Yeah.
Okay? In your household, you've either got some savings in the bank or you have got no savings.
Yeah.
If you have no savings, you're broke.
Yeah.
If you have got savings, that's what we can refer to as reserves.
That's your reserve. Yeah.
So countries use their reserves for trade purposes, to manage the strength of their currencies and so forth. So the reserve is essentially the savings.
It's almost like it's money that is in the country's balance sheet to say this is a small pot or a pot that you have, and a core reason for that is because, or a core reason why countries hold their reserves in the US dollar is because of the fact that the US dollar is the main currency for trade, right?
Precisely.
So if I want to go and trade with a British company, for instance, I would have to firstly convert my own rands into dollars, and then do trade with that British company. And then once that British company has concluded the trade with me, it can then convert its dollars into the pound.
Correct.
Hence we're saying it's the world exchange currency, the dollar.
It is the currency of trade, the US dollar.
Yeah.
And so the reason why countries keep dollars in their reserve is so that when they need to trade,
it's easy.
They already have dollars.
Yeah.
Can you imagine if when it's time to trade, the dollar's very strong, you have to pay a lot of rands to get dollars, and then the dollar keeps fluctuating.
Yeah.
So for stability and to be able to have predictable trade flows, countries keep dollar reserves. So that they can always just be paying in dollars.
In dollars, okay.
So that's the reserve issue.
That's the reserve issue. So a point that was made here is the fact that there is a weakening in the demand for the US Treasury bonds. Yeah, I want us to speak on that because it's an interesting thing for me, and it signals almost the time that we are in at the current moment, where a lot of trust and a lot of faith is being lost within this monetary system that the US is spearheading, or that it has spearheaded for quite a long time now. Yeah.
So, when we say demand for treasury bonds, what are we talking about? Treasury bonds are government bonds. We've spoken about government bonds a lot.
Quite a lot.
Show.
Yeah.
A bond is simply a loan that the government makes.
Yeah.
So why do we talk about demand for bonds? Who demands to make a loan to somebody else? Well, the reason why investors have a demand for any kind of a bond is because bonds are generally considered safe.
Yeah.
So when they've got cash, they think to themselves, what do we do? Do we buy shares on the stock exchange with this cash? Do we buy physical assets, land with this cash?
It's cash. Do we invest in companies? Yeah.
Some companies are risky. Some shares go up and down. But a government bond pays you a fixed income every 6 months by contract.
Yeah.
So big investors like pension funds, that's why they like bonds, because you can plan ahead and know that you're going to get this
cash consistent, guaranteed, and also consistently within a measured period. Because if you're getting your year, is it the coupon? If you're getting the coupon on a 6-month basis, you are quite certain that you are receiving cash flow for that period. Yeah,
absolutely.
Yeah.
And so coming back to the question
point,
you're asking, is that when we say that the demand for bonds is falling, it means that the appetite for investors to lend money to the US government is decreasing, which means there's a trust issue that's starting to come into the picture. And investors are no longer seeing the bond as such a guaranteed investment as they did in the past.
Yeah. No, that's very significant. And I think it also speaks to the fact that there's been interference, obviously, from the US government with Russia's reserve assets that they held in US dollars. And I think that is something that is alerting all these other different countries to almost have a view to say, no, do we really want to be putting our money into this asset that is not decentralized, that can just be influenced by a government just because they don't like something that we did? Going forward with this article, Health also mentions the fact that gold is winning at this point in time. Yeah. And I think it's quite significant, right? And I have some statistics here for our viewers. From the World Gold Council, and something that we've mentioned in one of our previous episodes here at the Money Revolution. These are statistics from the World Gold Council. They say that in 2024, central banks added a net 1,054 tons of gold reserves. 1,054 tons. Yes. So this marks the third year in a row where more than 1,000 tons has been acquired annually. That's very important, right? But here's the point here. that when you compare that with the average from 2010 up until 2021, the underlying, so when you compare it back then, only 473 tons were being acquired annually.
A
year per annum.
So it's more than doubled.
So it's more than doubled within what a couple of years, 2-3 years.
Yeah, because from 2021
from 2021 up until now. Yeah, and I think there's also an expectation that this buying spree of gold will definitely continue. Yeah,
I think it most definitely will.
Yeah,
the question that our viewers need to ask themselves is, if the central banks who issue the paper currency that you and I use are giving us the paper and they are hoarding gold, what are you waiting for to start accumulating your gold?
Your own gold,
What are you waiting for?
That's very interesting, and I think you have to think about it. You have to think about it deeply. And I just want to touch on something that Health mentions here in this article. He says that gold. So he speaks about liquidity sensitivity, right? He says that gold benefits from long-term reserve accumulations from central banks. So he's referring to the statistics that we've just pulled, and he also says that the dollar remains strong, but not because conditions are healthy, but because global liquidity is scarce. So when dollars are difficult to access, the currency appreciates even if the underlying economy is being strained. Okay, I think I agree with that. Yeah, but just to almost go back to the idea of gold being something that is being hoarded at this point in time. What are some of these properties of gold that makes people want to, or the Reserve Bank want to hoard onto gold in this particular point in time in history, in our economic history?
Yeah, well, gold has always been viewed as a store of wealth.
Yeah.
So people want to store their wealth more aggressively when they foresee a shake-up in economic conditions. Let me put it this way.
Yeah.
And again, the easiest way to understand these things is to consider your own household.
Yeah.
When times are good, when your job is paying well, when the bonuses are coming in, when prices are low, food prices are low, school fees are low, you feel like spending.
Yeah.
You're in a spending mood. Life is good. You're buying new cars. You're buying new clothes.
Yeah.
But when things start getting a bit tight, when the boss tells you that there'll be no bonuses this year, when the school sends out a letter to say school fees are going up next year, and you start to see interest rates maybe are going up at the Reserve Bank, or inflation is going up, once the individual has got a negative outlook, they start to preserve their cash. They don't spend as easily.
There's a need to hoard a little bit to some extent.
So when you see a pattern globally of the central banks hoarding gold, it's indicating to us that when they look into the distant future,
they can
not
see
even
something.
that distant, they see something that makes them concerned about the stability of the global financial system.
Yeah, that's a very important point. And I just want to show you some of the countries that have been acquiring quite a lot of this gold, right? And these are statistics from the World Gold Council. The countries include the National Bank of Poland. These are the reserve banks that are actually buying. The National Bank of Poland, the Bank of China, the National Bank of Kazakhstan, and also the Reserve Bank of India. One other bank here is the Reserve Bank of Turkey. And I think it's very important because, particularly with two countries, India and Turkey, both these countries have something in common in that they've experienced hyperinflation within the past 10 years. So you would assume that the country in general and the whole narrative within the countries, that they know the pain of having to go through an experience such as hyperinflation.
I think you couldn't have put it more succinctly.
Yeah.
They felt the pain. They know the pain.
Now they know the pain.
They're accumulating gold.
They're accumulating gold and silver because they can see the outlook. They can see that things are not looking up, and therefore they would need to put themselves in a position where they are accumulating real hard assets. And I just want to make this point to you, Mo Africa, that here at the Money Revolution, we advocate for real physical ownership of both gold and silver, obviously to protect your assets and also to grow your own wealth. Any other points you want to make, Ghost Money, in conclusion?
No, I think we've really covered what's pertinent for our audience to understand about, number one, reserves, why the dollar is a reserve asset, why the dollar is losing its status as a reserve asset. We've spoken about the bonds and why the demand for US bonds is falling. But what I will add is that when the demand for bonds fall, then the interest that the government needs to pay to make them more attractive goes up. So falling bond demand, our viewers need to be aware it's a sign that interest rates are going to go up at some point. We must not be fooled into a false sense of complacency because we've just had an interest rate drop of 25 basis points a couple of weeks back. Look what's happening in the US. The demand for US bonds is falling. It means the government is going to have to increase the amount yield of interest, the yield that it offers to attract investors back to the bond market, which means that the yield curve or the interest rates are going to go up as well. And that's going to affect every country in the world.
I think that's a very good point that you've made there. And I think it's a good way of closing this particular episode today. Africa, we like to thank you for joining us on this episode of The Money Revolution. I also want to say thank you to Ghost Money for your input. It's much appreciated. I know that the people love you and they've shown that in the comment section. We encourage you, Africa, to tell us what you think about this new format that we are incorporating into The Money Revolution. Also, add to the dialogue as we continue to unpack these issues and make sure that we empower you to grow and to build wealth. Once again, Africa, please like, share, and subscribe, and also hit that notification bell so that you never miss out on any of our episode uploads. And remember, Africa, if it's paper, it will perish.